Welcome back. A good start to trade. The Nifty is up close to around 100 points odd. But let's talk about a couple of earnings then. GMDC, well, the numbers were rock solid. It looked very, very good. There was a big surge in terms of revenues. It was up close to around 20%. And the good part is margins came in at around 39%. But the question is, can they sustain at these levels? Well, to understand more, we're joined by Mr. Rupan Singh, the MD of GMDC. Hi, Mr. Singh. We would like you to join even in the middle of a quarter, but unfortunately, we get you just once a quarter. So let's try to clear out a couple of aspects then. Coal prices, they have cooled off a little bit, and your numbers are looking very good for the past quarter. But given that coal prices have cooled off a little bit, have they had some repercussions on lignite prices? So could you tell us what is the average pricing of lignite you're expecting in quarter 4 and compare it with quarter 3? And what does it mean in terms of a margin band? Because you're closer to around 40% now. Go ahead, sir.
Nigel, 2-3 things in this. One, our competitor or the alternate fuel is imported coal. So there has been a softening there, and we expect a correction in the coming 2-3 months, a softening of that price. So we have already taken a minor correction in price February, and we plan to take a further correction if it is required. But still our margins are holding. We are still able to sell our product. At the same time, we have introduced few new things. For example, we have started rating our customers based on their performance and engagement with the company. A new initiative which goes by the name of CEI, Customer Engagement Index, has been rolled out. While these prices were softening, this index has come into play, and we are able to give better or more allocation to customers who are better engaged with us. So this has increased our bookings by 10%. So while the market changes, competition changes, we have introduced other measures. And in the coming 2-3 months, we plan to market our products based on their GCV value.
Okay, all right. Mr. Singh, couple of counter questions here. You said there's been a mild pullback in terms of prices. Could you quantify that? And also, since you're marketing your product well, what does it mean in terms of volumes? Earlier you were guiding for around 10 million tons odd. Then you scaled it down a little bit to around 9 million tons. I'm looking at the production number at the 9-month mark. Well, it's a little bit lower. So do you want to revise the volume guidance and give us a sense about the price correction? Go ahead.
Nigel, two crises, in fact, 2 project-related crises and 1 natural crisis we have faced in this financial year up to these 9 months. One, the rains were really heavy in Gujarat and spread across all the 3 geographic regions, which affect our production. One was that. Second, there was a repeat of a sliding in our Tadkeshwar mine, which is a very good project which earns us a lot of money. Tadkeshwar is very close to our biggest consumption center, Surat. So that project has been closed because of safety concerns. To resolve that, we would need at least 1.5 to 2 quarters. And the final challenge that we faced is the production quantity of the contract value has expired for Bhavnagar project. For that, to enhance our capacity, we have broken the project into 2 projects, 2 packages, and now we will be initiating work on 2 packages, which will significantly increase the production in the, say, by first quarter of next financial year.
But Mr. Singh, so just some numbers would help here, both on the volume and on the margin. Completely take all the points that you made on board. On volume, you had earlier revised the target down from 10 million tons to, I think, 9. Can you do 9 in this year, or will it be a little lower than that because of the reasons you mentioned?
It will be lower because the first 2 reasons I had factored in. Tadkeshwar is a surprise for us, which happened in the month of December. So expect a revision of 500,000.
8.5 million tons is what we are working with, but your longer term goal stays. I think in the last con call you had mentioned in the next 2-3 years you want to go to around 13 to 15 million tons.
Oh yes.
That stays?
Oh yes, very comfortably.
So 8.5 for this year. For FY24, what kind of a number will you be looking at, going by the measures that you're talking about, which has increased your orders by 10%?
We would try to reach the number which we had promised this financial year.
No, so
Close to 10.
8.5 for the and 10 next year.
Close
So
to 10.
8.5
Initially,
in
what we had initially
FY20.
budgeted.
Lovely. 8.5 in FY23. In FY24, we're looking at 10 million tons odd.
Close to 10.
Yeah, a quick question then, sir. What about the margin outlook? You said that you're taking various measures. The operating leverage will not play out now. So margin should settle in mid-30s instead of the 39% that you did?
I would say that would be a fair estimate.
Okay. All right. So we've got that out of the way as well. Now, the big question is what's happening on the rare earth progress out there? You know, the rare earth REE that you all have been talking about. You have appointed various consultants as well. What is the progress you promised us? By the end of FY23, you will give us a roadmap on REE. Is there been any progress or should we wait for the end of quarter four?
There is significant progress, but because of the strategic nature, I'm not able to share more details with you. As things get clearer, we will share full details.
Okay, Mr. Singh, just a word on the price adjustments, and you mentioned that you've been taking some price corrections. Some ballpark estimates of how much more would you have to adjust to come in sync with the way international coal prices are trending? And I mean, just the way you see the demand-supply outlook here for lignite, how much more correction should the market expect in the next quarter?
So we do our pricing, we take a call on it every fortnight. So we have an indicative plan for the coming 2 to 3 fortnights. But beyond that, we will see in mid-March, we will assess how the imported coal and the CNF price is working out. So we'll take a call there. But we have a plan for the coming 2 to 3 fortnights.
Just to go back to Nigel's question on rare earths, you have a lot of cash, right? About 1,700 crores of cash in your books. Are you using some of that for this rare earth development? If not, I mean, what do you plan to do with the cash in the maybe the near to medium term?
So the cash is now in excess of 2,500 crores.
Ah, okay.
Yes, and we have prepared a new capital budget. The capital budget is 4 times the capital budget which we had planned last year.
Oh.
Out of that, the major portion goes to land acquisition for our existing projects, the 2 I mentioned at Tadkeshwar and Bhavnagar, where we are facing constraints. One of the issues is land acquisition. And a larger amount, in excess of 800 crores, would go towards the new projects, which we have been talking about to you in the past.
Okay, so out of the 2,500 crores, you're saying the Capex spend for FY24 will be how much?
24, we have planned for in excess of 2,500 crores for 23-24.
Oh, of Capex, that is?
Yes.
Okay. All right,
we have
sir.
ambitious goals.
Yeah, you know, sir, I'll tell you what, at one point of time, you all had that cash balance and the street would have liked you to return some money, you know, maybe do a buyback, maybe, give a one-time big dividend. But that the plan seems to be on REE. So we'll have to wait by to see how that shapes up. So we've got a fair bit of details from you. Thanks so much, Mr. Singh, for stopping by.
And the capital planning that we have done, we have made provision. If a special purpose vehicle needs to be set up, we have made provision for that also.
Okay, all right. Thanks so much, Mr. Singh, for stopping by and filling us in with all those details. Quarter 3 was splendid. Quarter 4 could be a little bit softish. Volumes will be around 8.5 million tons for this year, 10 million tons for next year, and lignite prices have corrected a little bit, though Mr. Singh guides for margins of around the mid-30s.
All right, interesting conversation. But, Nigel, that rare earth question, I remember, it's under the wraps. It remains under wraps in terms of...
I think
it's rare.
It's rare. It's very rare.
No, I think
that's a big opportunity.
That's the big opportunity.
It's a kicker, upside kicker. It could be anything. It is substantial, we know, but how substantial, how big, that is something we try to probe, but, it's still, we'll get to know when we do. The market is up 100 points and it's steady, right? I mean, not very much different from how things were 10-15 minutes back. So it's kind of a strong start and then plateaued out. Lots of stocks are moving. We'll get to that in a bit. But Arvind Fashions is the next corporate we are speaking with after the company reported its highest ever quarterly sales. Gross margins have expanded, led by lower discounts and better channel mix. But revenue growth on a sequential basis, quarter-on-quarter basis, has been flattish. The emerging brands segment has managed to clock in good growth as well. Premium, of course, is doing well. Kulin Lalbhai is Executive Director at Arvind Fashions. He's joining us to take some questions to tell us how things are looking. Kulin, great to have you with us here. Good morning, Prashant this side. Let's just start there. In terms of the quarter that went by, could you tell us what kind of volume growth should we see? Did you take pricing action as well? Just trying to understand what the mix is between volume growth across brands and pricing action, and how these contributed to overall turnover growth, and how are things really looking? Are things picking up, accelerating for you, urban versus rural, or are things, it's a bit mixed now, as we've heard from many other companies as well? Go on.
Yeah, so we had a very robust sales growth of 17%, and one has to understand that last year, Q3 was the first real completely recovered quarter. So in fact, last year, Q3 was a very strong quarter where pent-up demand had got unleashed because COVID had just receded. And on top of that, we have grown 17%. So in fact, it's a very robust growth. The ASPs in general were up by 8 to 10% because of the cotton prices. So there is a good amount of this. I mean, more than half that came through, increase in prices, but we have had volume growth as well. And that, in a sense, shows how, the brands that we have, the brand portfolio is strong. And that's why it's driving both volume and value growth. We believe that, currently the momentum which we have seen in Q3, we currently expect that momentum to continue. So we are seeing broad-based growth. Online as a theme has always been playing out for the last 3-4 years. But the theme this year is that the offline side of the business is seeing a big lift, which is very encouraging.
Kulin, morning. If I could just nitpick for a second over here, take your points on the year-on-year comparison. But I was a little surprised to see that sequentially, the revenue is actually very flat. And it's the third quarter, right? It's a festive season. Everybody wants to look good, feel good. So what could explain that? I mean, are there some nuances in customer behavior that you're picking? Is the pricing increase beginning to maybe pinch a little bit?
No, that's a very good question. Let me explain. It's difficult to look at quarter on quarter in our business because we have all our channel mixes change every quarter. So Q2 is when our wholesale channel picks up. That is where we send all the goods beforehand to the market for Diwali. So Q2 is a wholesaling quarter and Q3 is a retailing quarter where our retail part of our business really picks up. So even if you look at historically, the difference between Q2 and Q3 for our company is not very large. This particular year was a little different because Diwali was early, and that's why Q2 was a little larger than normal, and Q3 is a little smaller than normal on the margin. But again, I repeat, year on year is the right way to look at our business and not quarter on quarter.
Hi, Kulin. Good morning. I recall you saying that the power brand portfolio can have double-digit margins in 12 months or so. And the company on the whole will move to double-digit margins. You've achieved that, right? So what's the outlook from year on in terms of, margin outlook, as well as now you're clocking a good 1,000 crores per quarter. How does FY24 shape up?
Yeah, Nigel, so we are still a little shy of the double-digit pre-Ind AS. Post-Ind AS, of course, we are at 12%. But, there is a difference of 400 basis points for us between pre-Ind AS and post-Ind AS margins. So we do believe there is going to be a lot of operating leverage which is going to come into our business year on year. If you have seen this year, our margins versus last year have gone up by 400 basis points YTD. Of course, that was because of the COVID impact last year. But even without the COVID impact, like this quarter, we have increased versus last year, Q3 by 100 basis points. And there was no COVID impact. So this is pure operating leverage kicking into our business. And that's happening because we are lowering discounts, increasing full price sell-through. All our brands will move towards larger scale. We want to build 1,000 crore brands, and that's the journey we're in. So as the operating leverage kicks in, we would expect our EBITDA margins to go up by around 100 basis points every year.
Okay.
And on the
what about
growth side,
top line?
we have guided anywhere between 12 to 15% growth over the next 3 years.
Kulin, you said, you said 1,000, you mean 100 crore brands, right?
No, we now have consolidated our portfolio. We are focused on only 5 to 6 brands.
Yes.
And almost all of our brands are now larger than 500 crores. But the ones which are around 500 crores also will scale up to 1,000 crores. And very large brands like US Polo, the ambition is to make them cross 2,000 crores in scale in the very near future. So we are now building very large scale brands so that the operating leverage kicks in and the free cash flow profile of the business transforms.
US Polo moves to 2,000 crores by when?
In the very near future, Nigel. I mean, this year we've already clocked 1,500 crores in 9 months. So we are well on track to be very
then it
close
should be
to
this year
2,000
itself, Kulin.
crores.
It should be this year itself. I mean, you're going
We
at a
will
run
be
rate of
close to
500
that
crores.
number.
Okay, all right.
be
And you
close to
also spoke about the online business. I think it was 25% of business, right? What's the growth you're seeing
Yes.
out there and what's the contribution?
So it's around 25%, Nigel, as you said. It's a very healthy business for us, growing very well. And, it should grow faster than the offline side of the business. So we do expect, now the scale is very large, but we do expect that growth rate to be at least 5% higher than the offline side. So 15 to 20% would be the guidance for the online business.
Okay. Kulin, very quickly, just to clarify that margin point, if I heard you correctly, I think you said that you were looking to increase margins by 100 basis points every year. I think FY22, you were close to 6%. When do we see double digits? Then is that 4 years?
So, our first milestone is that we hit our power brand double-digit EBITDA, and we do expect to achieve that milestone next year because we are already just around 100 or so basis points away from double-digit. And then when the smaller brands scale up, those will also start moving significantly on their EBITDA profiles. So right now our guidance is 100 basis points in margin on the base we have, but we would look to better that as well, every year.
And you said, Kulin, that all your brands are 4 out of the 5 are 500 crores plus brands.
Yes, that is correct.
Okay.
I think we got a sense. I think Prashant is contributing to that growth.
I'm sure so are you. Happy customers?
How is Arrow doing, Kulin, if I can probe a little bit?
So, Arrow has been a great turnaround for us. We've worked very hard on the brand over the last 3 years. The product is re-energized. We've got a new retail format. We've got a great brand ambassador in Hrithik Roshan. So, the brand has very high energy right now. It's now 3 quarters of consistently positive EBITDA. And, as the brand gains scale, it is also going to move, from the mid-single-digit EBITDA margin towards the double-digit EBITDA margin over the next 2-3 years. So we're very happy with that turnaround, and the brand is now well on its way to scaling up towards the 1,000 crore mark.
Okay, good to hear, Kulin. It's a pleasure. Thank you very much for joining us, and a good commentary and very optimistic on the business going forward. Thank you very much for taking out the time and being with us here on CNBC-TV18. Well, let's just take a quick look at the market, which is now I think at the high point of the day, we are up 115 points up, which means that we are at 18,130. The high actually is 18,134, but almost there, 4-5 points away. We'll take a break here. We are back. And on the other side, we get you a quick technical check on markets. Mitesh will do that for us. And of course, we take stock of what's happening in the commodity space. Stay tuned. Okay, welcome back. We've got the market, which is, holding steady, but not building on or not galloping away. Mitesh is with us for a quick check on, what he's making of the sort of price action so far. Mitesh, Over to you. What are you picking up, and what would you want to put out as trades now?
Prashant, good morning again. One, we've kind of nearly met the targets of 18,150. That was the level where the market had peaked out on 18th of January, and then again on the 24th of January. So I think there could be some profit booking in there for a couple of hours of stall over here, but the overall structure remains very positive. So I expect 18,250 to be tested in the next 2 to 3 sessions at least, and maybe even earlier. So I think stay positive. Take some profits off if you want to book something, but otherwise stay with the long bias very clearly. I have 2 IT names as recommendations right now. LTI Mindtree, that's a buy with a stop below 48.40 for targets of 5,000 plus, and LTTS, which is again last in into technology services, that's a buy as well with the stop at 36.90 for targets of 38.20.
Okay, got that, Mitesh. Thanks for the quick calls. Market's holding up quite well. Let's focus on some of the stocks that are really hitting the headlines, and the Adani group of stocks makes it to that list once again today. Vivek is joining in to once again recap what MSCI announced, basically the pushback that they've done, not looking to change weights on some of these Adani group companies, at least not in February, right, Vivek?
Absolutely right. So in February, what's actually happened is that, post the announcement by the MSCI, 2 stocks, especially Adani Transmission and Adani Total Gas, all of these stocks were continuously hitting the lower circuits. So, in case of an example, you saw Piramal Pharma earlier that was deleted from the MSCI index. However, the funds that track the MSCI index changes were unable to implement it simply because, because of the stocks were already at the lower circuit limit. So citing the same criteria for Adani Transmission and Adani Total Gas, MSCI has deferred the implementation to the May review. Now, as far as Adani Enterprises is concerned, the weight reduction will happen, as per what MSCI has done. However, there is now going to be a special treatment of all of the Adani stocks within the MSCI index. So, in few of the funds, however, when you're talking about the MSCI Standard Index, the fund that is tracked the most, in that the weight reduction will happen in Adani Enterprises, and a little over $180 million of outflow is what analysts are anticipating will happen, at the end of February.
Okay, got that. That's quite helpful. So $180 million of outflow is roughly what's estimated. Thanks, Vivek, very much for that. Well, that's, of course, the Adani group. The other one, of course, is this move on PI Industries that continues. Again, let's look at the conference call highlights. Sonal, so what is it that the market's really liking, which is powering the stock today as well?
Well, the fact that they're maintaining their growth guidance. In fact, they're expecting a 20% growth in their revenues, and they will be able to maintain their EBITDA margins between 23 to 24%. This is at a time when other companies are talking about exports being challenging and higher raw material prices as well. Additionally, the company saw working capital reduction of almost 400 crore rupees in this quarter. Cash flow from operations on the back of this increased substantially, came in around 700 crore rupees versus 120 crore rupees. Their export order book continues to remain stable at that $1.8 billion mark, and they are not seeing any slowdown in exports, which is, of course, a big positive as well. The domestic business, which saw just 2% growth in this quarter, will grow at double digits in the next year, and that is a positive as well. FY24 capex is at 800 to 850 crore rupees. In FY23, it was 500 crore rupees. So there's a big leap as far as expansion plan is concerned as well. Motilal Oswal has a buy rating with a target price of 4,300 rupees per share. They say EBITDA margin has been increasing from levels of 19% in fourth quarter of FY21 to now that is 25.7%. So they definitely like it. Nirmal Bang says that PI Industries, it is beefing up their pharma team of resources and is still working on pharma M&A, but still that is a positive. They are building organic CSM business and pharma intermediates, basically the export business. So that could be the additional margin lever as well. That's why the stock is higher in trade today.
Got that, Sonal. Thanks very much for all the details there. So PI Industry is quite a big mover, 5% on a 3% move yesterday. Not bad at all. Well, one more stock for you. Let's pull up Tanla Platforms. This one is surging almost 7.5%. Let's get in Rima to understand why. What's happening with Tanla, Rima?
Hi, good morning. So Tanla Platforms has announced that they will be launching Wisely ATP, which is an anti-phishing technology platform. Hence the name ATP. Anti-phishing, technology platforms. Basically, phishing is when you have all these cyber scams taking place on your mobile phones via SMSs, emails. It appears to be that it's a trusted person sending you a link to make some payments, but it turns out to be a fraud, and then a lot of people are losing money. So that basically explains what phishing anti-phishing is, and Tanla Platforms, with this new ATP launch that they're looking to do, anti-phishing technology platform, they are looking to curb this. The launch will take place at Mobile World Congress in Barcelona on February 27th, but as of now, the patent is still pending. Now, this ATP platform, Wisely ATP platform, has already begun live testing in a regulated environment, which is called the regulatory sandbox. So the TRAI had approved the regulatory sandbox, which basically means live testing of these products, but in a regulated environment. As of now, the validation of the impact is in process, and simultaneously, the company is also in advanced discussions with 3 major banks in India to launch a proof of concept. So the street is excited about the prospects of this particular technology platform launch. But remember, one of the other reasons why the stock is also doing well, it's coming off a low base. The stock has slipped more than 60% in the last 1 year. Back to you.
Got that, Reema. That's a really interesting one, Prashant. I don't know about you, but this phishing business scares me so much. I've stopped doing any transactions. I've stopped clicking on any link. I tell my bank, I'll come to you in person and talk to you. Don't ask me to enter some OTP or click on some link.
It is scary, and one has to be extremely careful. And you hear anecdotally so many cases where people have lost money, and then of course have to kind of it's a uphill task then to try and figure out a way to get your money back. So better to be safe than sorry. We'll take a very quick break here. Market still holding with almost triple-digit gains, but our special segment, it's the economy, is coming up. Lata will connect with Samir Goyal of Deutsche Bank to decode trade deficit data, which came out at the higher than expected consumer price inflation numbers for the month of January. Stay tuned for that conversation.
Renu,